Look at Asian markets, and what do we have there? Asian markets by and large are trading flat with a minor upward bias. If you check in on Japan, Japan is down by only 0.5%. Chinese markets are looking strong. The Chinese economic data, at least PMI numbers which came on Monday evening, they were quite encouraging. What about the dollar index and global volatility? Global volatility is under control and the dollar index is meandering in and around 80 on an intraday basis. Yesterday the dollar index did slip below 80, but the current trade is marginally above 80 for the dollar index. But the big fly in the ointment is crude. Crude refuses to come down, and it is unfortunate just at a time when Reserve Bank of India has indicated that there is a change in their rate, in their policy stance. Crude prices have appreciated. So if crude prices march up to a new 52-week high next 2 or 3 weeks, it would be quite engaging to see what Reserve Bank of India does. So if crude stays up, all the bull talk, you'll have to keep it aside, because the biggest moving part for Indian markets, at least at a macro level, is still commodity prices. Michael Cho joins us, Chairman Market Field Asset Management, joins us live from New York. Michael, morning. Thank you for joining us. Michael, if I look at how markets or how asset prices have moved in last 24 hours, in last 48 hours, it appears that the risk on trade has started. Dollar is down, commodity prices have shot up, and emerging markets are bouncing back.
You know, I think what's happened is simply you finished the year, and when you finished the year, what you did was you finished the significant redemption pressure which was on multiple markets. Right at the beginning of the new year, you see a little new money go to work. It's fairly obvious that there's new money being put to work within the commodity complex. You talked about crude oil a few minutes ago. I think crude is definitely a beneficiary of these flows. And I think what we need to do now is simply wait, until the first, maybe the second week of January is completed. And, from that point on, I think you have, what we would call more honest markets once the year-end flows have completely gone to work.
Michael, hi, morning. What about the bigger concern, that is the European situation, because you've already have, Greece, which has come out and warned against an EU back out, and they've said they're going to withdraw come April. Not just that, you have the French auction as well today. So which way are things panning out there?
I think Europe has actually made decent progress over the last month. I think people have come to understand that the ECB is going to play the role of lender of last resort. It's not going to do quantitative easing. It's not going to be what we would call a buyer of last resort. But, the ECB has grown its balance sheet by over 700 billion euros now since the summer. And much of that money has ended up in the sovereign debt market, either via direct purchases by the ECB or by lending to banks who have then stepped in and bought their own country's debt. So I actually think that I think Greece is fairly insolvable. I think Greece will have some kind of a default. They'll try and call it something else. But, I think the rest of Europe probably is going to step back from the edge of disaster in 2012. And parts of Europe, I think, is going to start to respond to radically easier monetary policy, particularly the northern part of Europe. I think you might see some surprisingly strong growth in parts of Germany and parts of Holland.
Michael, the Dow Jones for the year 2011 was up about 6%. That made it the best performing index across all major markets. Do you think in the current year, which is 2012, Dow could register a 15% gain?
Yeah, I think it's certainly possible. I mean, we don't have a particular target for the Dow, but I do think it's the sort of market you want to be in. If you look at the Dow, what's interesting is it has a very small financial weighting within it. It's become heavily industrial, heavily retail, a lot of consumer discretionary and consumer staple stocks. And, I think those are decent parts of the market to be in. We certainly think that the domestic U.S. economy and equities related to it, can easily post double-digit gains this year.